know that maintaining a positive working capital is so vital as it helps meet all your business's short-term obligations and fund long-term growth. But the components of working capital management are so many. There's cash and accounts receivable and payables and inventory, to name a few. But don't worry, we have got it all covered and our strategies will tell you how best you can focus on the things that matter. By the end of this video, I will tell you the 5 strategies of managing your business's working capital. I will even tell you about a solution where you can increase your business's working capital by up to 7%. Hello and welcome. I'm Maheshri from the makers of ClearTax. We're India's largest tax and financial services platform. We serve more than 3,000 large enterprises and more than 4 lakh growing businesses. Please subscribe to our channel to get clear explanations of direct tax and GST updates, as well as finance concepts that will help you make better business decisions. Working capital is the difference between a company's current assets and current liabilities. It indicates the efficiency of a company's operations and how financially stable the company is. Having a positive working capital helps an enterprise meet its short-term obligation, improve its creditworthiness, and fund its growth. Effective working capital management is the key to success for any organization. Today, I am going to take you to the 5 strategies to take your working capital management to the next level. First, digitize your procurement and inventory function. Inventory is one of the most important components of a business's working capital, but the efficient management of inventory is sometimes neglected. While the shortage of inventory leads to lost revenue opportunities, the holding of too much inventory blocks capital. This is why inventories need to be closely monitored. Slow-moving inventory needs to be downsized and companies should focus on increasing their inventory turnover cycle. From a working capital perspective, every business should look at optimizing its inventory by analyzing past and present performance metrics and implementing inventory management processes. Digitizing this function could help identify key trends, forecast demand, and make more precise ordering decisions. Second, improve receivables management. Another strategy to improve working capital is to keep the sales to cash cycle as short as possible. Reassessing contracts and credit terms from time to time will ensure that you do not give debtors a larger than necessary windows to settle their dues. Another major challenge enterprises face is bad debts. To reduce bad debts, enterprises should implement rigorous credit checks. Bringing in technology to automate the accounts receivable process can shorten the receivables period through faster invoice processing and collections. It could also facilitate automated timely reminders and could potentially reduce bad debts. Businesses should also make use of digital supply chain financing options like invoice discounting and factoring, as they offer quick cash conversion at very low cost. Third, automate input tax credit claims and GST return filing. While indirect tax compliance did not affect a business's working capital in the past, now businesses find their working capital blocked due to the tight restrictions surrounding input tax credit, that is ITC. The government has recently amended the Goods and Services Tax, that is GST law, to ensure that a business can claim ITC only if the same reflects in their GSTR 2B statement. This puts increased pressure on enterprises to reconcile their input tax credit carefully and frequently and communicate any missing information to their supplier. Given the tight restrictions on ITC claims and the resulting effect on working capital, every enterprise should look at automating their GST return filing and input tax credit claims process. Automation guarantees accuracy, and if ITC claims are not 100% accurate, then working capital takes a hit. Besides, a business could also be liable to interest penalties and demand notices. So, are you finding this video useful so far? If it is useful, then please type yes in the comment section below. Moving on to number 4. Automate vendor communication and vendor payments. Maintaining a strong relationship with vendors typically results in a better quality of product supplied, higher discounts, and more favorable credit terms. At the same time, every enterprise needs to ensure payment discipline so that suppliers are paid on time. Automating the vendor management function helps streamline all vendor-related processes such as onboarding, invoice processing, communication and coordination, and payment management. Further, with the stringent input tax credit rules imposed, the dependency on vendors to upload invoices on time has increased manifold. Just because your vendor does not upload invoices on time, why should your business suffer? Withholding payments in such a case might push vendors to upload invoices. However, it is not possible to track each invoice manually. Hence, automating the vendor management process serves a twofold goal of streamlining the vendor function as well as improving input tax credit claims. 5. Use real-time data analytics to detect anomalies. Business leaders can make financially viable decisions only if they have the relevant information at hand. Gone are the days of month-end and year-end reporting. Now every business leader wants access to reports and metrics on tap. This is why every enterprise should implement a system of real-time reporting and data analytics that provide financial visibility to implement and monitor a working capital strategy. Data visualization not just helps in monitoring performance but also indicates areas of profitability, highlights trends, and flags discrepancies even before they become issues. Did you know that at Clear, we have devised a solution to enhance businesses' working capital and profitability just by maximizing input tax credit claims? The ClearMax ITC solution completely automates the input tax credit claim process and helps you unlock up to 7% of working capital. So far, we have helped over 3,000 enterprises save over 9,000 crores. If you'd like to know how the ClearMax ITC solution can enhance your business's working capital and profitability, please click on the link in the description below and don't forget to request the demo. We are now at the end of the video tree of the series, The Insider's Guide to Working Capital Management. In this video, I took you through the 5 best strategies to effectively manage your working capital. In our upcoming video, I will tell you how Clear helps businesses with their working capital management. So stay tuned. Also, please don't forget to click on the link in the description below to explore the ClearMax ITC solution. And if you haven't already, do subscribe to our channel for clear explanations on various finance concepts. Thank you.